Alrighty, guys, welcome to tonight's session. It is July 23rd, Sunday night. Hopefully, all of you guys have enjoyed your weekend, ready to get the week started. I know I am for sure. So, schedule for tonight. First thing I want to go over is two trades that I want to go over. One was on NQ that we took Friday in the afternoon, and then one was on gold that we took on Thursday, and they're very, very similar setups. So I want to kind of go over the reasons why I took them, and what my entry was. What did I think? What was I expecting to see? What was my risk on it? So we'll go over those, and then after that we'll go into just sort of the charts in general, looking at the past action. Maybe if there was any other trades that maybe presented themselves earlier this week that we could have capitalized on that I failed to see. And then we'll go over what we're looking at going into the rest of the week, looking at price action. We'll look at news, talking about what our overall bias is going to be going into the week, and then we'll possibly end off with doing a little replay session, and then any questions you guys have along the way. So first thing, we'll get started. We'll look at NQ here. So going into Friday, I did have a bearish bias. Now, there was multiple things that I was really watching to see. The first one is we did sweep this low. So I was a little bit bullish, but the reason why I was overall bearish is because this initial low being swept here, right? So we had this initial low, and if I was looking to see any sort of move back to the upside, I would want to see not a lot of follow through. So if we were looking at this, right, this is the original low that we were looking at going into this week, and I wanted to see this hold and then look to bounce back to the upside, right? Because we've been talking for a lot of the previous weeks that for me to be bearish on a bigger time frame, I need to get displacement through some sort of low, right? Because ever since that we started, this kind of bull trend to the upside, we have not displaced through any sort of low, right? We put a low here, we continue higher. We put a low here, we continue higher. Here's when we started to get moved back down. So I was expecting to see here come up, maybe sweep this and then go back higher, but we actually displaced through this level. So what's that telling me, right? We probably want to go lower. So this no longer becomes a sweep of some sort of liquidity, right? This is now becomes whatever our break structure is on a bigger time frame. So this on a bigger move is now pulling back to whatever that discounted range is, or whatever sort of PD array that we're looking for. So going into the day, again, market opens around when we're up here. So you can see we have a push to the downside in the afternoon session of the previous day, and then we start to get a little bit move back to the upside, retracing right price, and then I'm expecting to look back towards the downside. So this on a bigger time frame would now be our break of structure. So going into Friday, I was expecting to see a continuation to the downside, especially, right? We just swept these two recent highs, as well as that monthly fair value gap is there. So we'll go into a little bit later in tonight's session about what my bias is, but I will say it will be bearish going into this week. So looking at the specific trade, let's zoom in here. Looking at the 15-minute, we can see we come up. We ended up tapping into this 1 hour fair value gap, as well as tap to the tick this 15-minute fair value gap here. We get a nice little move going down to the 5-minute. We had a big sell-off to start the morning. Now, looking specifically at NQ, in the morning, there was really no trade that I was expecting to trade. So I actually didn't trade in the morning. I decided to move the live session on Friday to the PM because I was expecting to see a lot of slower action in the morning session. You can see in the morning session, we had just had this kind of move to the downside, and then ended up having a lot of slow action, lunchtime. And then when PM decided to come around, we actually got a really nice trade. So let's talk about this. So number one, we end up having a big move to the downside, and this is kind of giving us our bearish bias, right? So we have a bearish bias going into the day. We just broke through this. We've now retraced, and we're rejecting this sort of PD array. So another thing I'm also looking for is there anything on here that has some sort of, bull bias, like maybe a fair value gap or anything? So we kind of have, small little 1 hours here. If we go to a 30-minute, we kind of have, a little bit of fair value gaps here. But notice on this initial move to the downside, we end up railing through all of this, right? So this is telling me, all right, we're definitely not bullish. We just came up, retraced, rejected, and then immediately had a massive sell-off back to the downside. Now, the biggest thing that I'm noticing is that we never took this low on that initial push down. So what is this now creating, right? This is now generating liquidity. We have relative equal lows at the downside. I'm expecting us to come back to take these lows somewhat. Now, I don't know if it's going to be now. I don't know if it's going to be later in the day, whenever it is, right? But when we initially come down and we put this low in here, I am expecting all of this generated liquidity to then get hunted either later in the day, maybe a separate day, whenever it is, right? But that's what I'm focusing on. So for me to look to take some sort of setup targeting this low, I need to get more price action. I need to see more structure start to form for me to get a better idea of when that time is going to be. Because again, liquidity is all about time and price, right? So what time, what is the price, how is structure overall benefiting this? Because a lot of the problems with new ICT traders is they'll see equal highs or they'll see relative equal highs and they'll automatically jump the gun expecting that low or that high to be taken like right away. And that's not the case, because how do equal highs form? They form by going to whatever that level is and then having a significant amount of time before going back to that level, right? So what am I looking for here? So going into the day, I'm overall bearish. I'm expecting this to become the draw on liquidity. And the reason why I didn't really take any sort of trade right here is because here there is no clear draw on a smaller time frame. Now, I know the draw's lower, but there's no really reason for me to take a short here or, somewhere in here or, anywhere, right? So what am I looking for? So the first thing that I actually noticed is, again, first thing I noticed was we created these relative equal highs. And then on a 30-minute time frame, I can see that we actually created this 30-minute fair value gap. So this was the biggest thing I was really watching for going into the PM session, is looking to see if we could retrace back up into this area, which actually becomes OTE. So if I draw in a fib from the high to low, we can actually see we come back, we reach discount, and we actually tap that 0.62 level, which is that optimal trade entry area. So zooming back in here, I'm looking at the 5-minute, and we can see that we have a significant high here acting as buy-side liquidity. And this is when I'm looking to see the rejection. Now, I'm not looking to take any sort of trade here yet. All right, I want to validate my bias, which is I'm bearish. I think the draw on liquidity is this low. So I need some sort of intraday model for me to take some sort of short. Okay, number one, what am I looking for? Rejection of a bigger time frame PDRA. All right, check. That 30-minute fair value gap, right? We just rejected that. Number two, we just swept some form of buy side, right? We had that intraday high. We've now taken that high. Notice no follow through this. Rejects, wait, breaks through, rejects, break through, rejects, break through, rejects. Okay, now what am I looking for? Looking for some sort of break of structure. Okay, zooming in. What's my recent high or recent low? Right here. So this now becomes my market structure shift on a bigger time frame, like that 5-minute, right? We have that low put in and we get big displacement, right? Notice there is not like a little poke through this level to then go higher. We get a massive candle to the downside, respecting, right, or disrespecting these past fair value gaps and showing and clearing that the draw on liquidity is probably going to be lower, right? We've rejected a bigger time frame fair value gap. We've swept that high, and now we're breaking structure to the downside. Okay, now what am I looking for? Well, when we get that initial candle to the downside, I see that we have, again, I'm expecting to see a big fair value gap, right? Because whenever we have a big move, again, displacement is fair value gaps. Without a fair value gap is created when we get some form of displacement, right? So I'm looking to see this big move down, and I end up seeing that we actually created this 15-minute fair value gap. Also, we created this little inverse here. So I waited for this 15-minute fair value gap to close, and I was looking to see the reaction. Again, I'm very particular with my entries. I want to see everything check the box first, right? Everything check the box to know that time and price is going to go hunt now, right? Because I don't know if we're going to go here. I don't know if we're going to hunt this liquidity here. I don't know here. I don't know anywhere unless all of these things start to align. So not only did I wait for this high to be swept, not only am I waiting for the rejection of this 30-minute fair value gap, not only am I waiting for a break of structure, not only am I waiting for the rejection of the pullback of that fair value gap, that is when I can say, okay, everything's starting to check off. I have a lot of confidence and probability that says that the draw on liquidity and the hunt for liquidity is going to be right now. So that's when I zoom in. Again, what am I looking for? I'm now looking for some sort of retrace back to discount. Now, I don't even think that we retraced discount of this entire range, but we did from this leg. I'll check if we did here. Yeah, we didn't here, but we did retrace the back discount from the previous leg. But again, I'm only watching to see that 15-minute fair value get tapped back into. So what am I waiting for? I ended up adding my first contract right when we tapped in. So right when we tapped into this 5-minute fair value gap here as well, I added my first position, which was half of my contracts. So I added around half my contracts right here. Once I get to see the reaction from this, I then look to add the rest of my position. So we're coming up, boom. We sweep that high. I'm adding half my position because we're retracing back into that 5-minute fair value gap. Where am I looking to add? Once I see the rejection of this, I then look to add my rest of my position. I added somewhere around here. I actually don't remember where specifically. I'm guessing it was maybe this fair value gap that we tapped back into. So I added my rest of my position right there. My first price target was that recent low. once we broke down this, I took off that initial half that I entered, right? Managing risk. Took off that initial half, and then I let the last contracts run to that sell side level, and then we got, again, straight move to the downside. This is how you know that you are having a good trade and can recognize what price and time does, because when you know how price is respecting, what time of day it is, where the draw on liquidity is, when you enter a trade and you have confidence with all those things, this is how that trade should look, right? A lot of the times when we have a clear draw on liquidity and we have clear price action, we have clear time of day, we know all of these things, we have conviction for the trade, a lot of the time you'll just get a straight hunt to whatever that draw on liquidity is, right? So that's what we can see here. Literally right when we entered, we top ticked it, straight down move to whatever that, that buy side was. So that was the first trade that we ended up taking. Or that was the only trade we ended up taking on Friday. I stayed patient the entire day. I took no trade in the morning. And our first trade happened to be, power hour. So great trade to end the week on Friday and bring the eval up. So the next trade that we ended up taking, or the previous trade was on Thursday. Actually, first, does anybody have any questions on this specific trade first before we jump into the other one, the gold trade? Make sure everybody gets this. So when I originally entered this, my stop loss was loose because I was in half my size, right? Because I wanted to give this a little bit more room. Because first, this 15-minute, right? 15-minute fair value gap is what I'm basing a lot of this thesis off of. So my stop for this has to give a little bit of room because we could still possibly come up here and then reject, right? So I entered half of my position first because I knew that I wanted to give it a little bit of room. So I put my stop at this high here. So I put my stop at that high. Once I added my full position here, I moved my stop to the top of this high. So originally my stop was here. Once I saw us confirming this rejection and we saw displacement back to the downside, I added my full position and I moved my stop to the top of this wick. My break of structure on which time frame? Overlapping models, this was my break of structure on the 5-minute. Sweep high here, break of structure to downside. On my 1-minute, again, same exact model. We sweep high. What's my break of structure? This move to the downside right here. I don't really care if it's this low or this low. All I need is this displacement, right? I can recognize just by that candle. Do you consider to wait for an internal sweep for better confirmation? Yes. Like this. Again, we have this high come up here, which is also the high of that 5-minute fair value gap. So that's the way I like to do it as well. If I can get, a high that overlaps with some form of, some PD array, that's where I'm going to look to take, the best entry possible, right? Because we have that high put in here. We have a 5-minute fair value gap. If I zoom into the 1-minute, that's our recent significant high that we're looking to see get swept and then look to, continue to the downside. All right. So let's check out that gold trade that we ended up taking. Am I on the right chart here? Where am I right now? There we go. Okay. So zooming in here. Let me take this off. Sell side here. All right. So where this was, first thing, looking at the 1 hour. Actually, let me replay this so we can actually get a better understanding of kind of where this was. So first thing, looking at the chart, let me go to a 15-minute so I can play this out. All right, so this was kind of what we were looking at here. So this is what I was looking at when I first saw this trade. We had buy side swept up here. We had a clear sell side, and also looking at a bigger time frame here is 1 hour. We have not yet retraced a discount. We have a big range right here, right? We have a big range right here. Discounts resting right here. I'm expecting us to probably come back to discount of this range, right? This is where our sell side is now resting. So what do I notice here just by looking at this chart? Well, we have, again, clear buy side being swept here. We have that recent high. There's no displacement through this. We get big displacement to the downside, but there's not really a break of structure here, right? There's not really a low that we can say that, we broke through here. So I'm kind of still, if price action was here, I would still be a little bit cautious taking some sort of short. But my real break would be this. This would be my first actual break of structure or my market structure shift, whatever you want to call it. So this, now pulling back to the discounted fair value gap, this is the perfect short opportunity. Unfortunately, I did not get that short. I got this. So this is exactly where market was, where I looked to take the short on gold. Again, clear draw on liquidity. Everything in this chart is telling me that we want to go to this low. We have buy side swept. We have displacement back down. And then we get a break of structure, even more displacement back down. We've retraced to a discounted 15-minute fair value gap and had a massive rejection, right? This is telling me draw on liquidity is going to be lower. So I zoom in. What am I looking for? Again, very similar to that previous trade on NQ. We come down, but don't end up taking that low. So I still recognize that we're probably going to go lower. This is now just a retracement back to that fair value gap. So I can see that we pull back to this 5-minute fair value gap and discount, and I automatically start to load up. This is where I entered half my position size. Zooming in on the 1 minute, I entered half my size right here. And again, loose stop to begin with, because I'm planning on moving my stop once I enter my full position. So we're in that 5-minute fair value gap. We've now retraced back to discount of this price leg. Break of structure here. We pulled back to discount. Once I see that rejection, this would now be our internal break of structure. Now pulling back to that. Again, haven't taken this low. All it is, guys, is overlapping models. We're just overlapping models to get the best possible entry that we can possibly get. So I'm waiting, right? I'm waiting. I'm in half my position, right? I'm waiting to see the full rejection for me to add, right? I'm waiting to see the full rejection, which is internal break of structure, for me to recognize that I'm going to add my full position. Boom. Right when I get this big candle to the downside, I'm looking to add my full position. Unfortunately, I actually got a little bit late of an entry here. We ended up getting a big sell-off, but we didn't take that initial low, so I'm still looking to add. And then this is where I added right here in this fair value gap is when I added my full position. We tapped it. Thankfully, I got my rest of my position tapped right there, and then we got a big move to the downside. I would have liked to added right here in this fair value gap once we got that initial rejection candle to the downside. Looking back, I would have probably looked or should have added right here on the rest of my account and then moved my stop maybe a little bit lower, maybe not top here. But this ad was a little bit late, but honestly, it wasn't bad at all. Like, again, I'm totally fine taking this because I still recognize the draws here and we haven't taken that low yet. Now, I would not like to add here once we've taken this low. So now I'm in my full position. Once we come down, I end up taking off those 2 contracts that I added previously because that's my first price target hit. We continue to sell off. I take off another contract right here, and then I let the rest of my contracts run to that 50% point, which is the 50% of this entire range, right? Because we know that we're probably going to retrace to discount. I want to see if I can catch that breakout to the downside. So we end up getting a nice move, retrace back up into that fair value gap, continue to respect it, and then we get a nice push all the way down to that 50% mark where I take off my last contract. So again, great short on gold, just to show. Let me see if it shows the things here. Will it show my executions? Orders. Why doesn't it show my executions? Did I log in on everything? Yeah. Huh. Maybe it was on the wrong thing. Interesting. But on the Twitter it shows it. But here were the executions. I'll show you a picture. I don't know why it doesn't show it on that. This was the NQ trade. So this was the NQ, this was the NQ trade. And this was the gold trade that we took. So 2 really similar trades. Again, clear drawn liquidity. Now, what makes these trades good, right? That's what we want to cover as well. What makes these trades good? Number 1, both of these trades had a lot of confirmation. All of them had overlapping models. We wait for one thing to appear, and then we wait for another thing to appear, and then we wait for another thing to appear, right? Again, all of the bias that is looking at this is all overlapped models. Okay, let's see exactly how many models are in this, right? Number 1, 15-minute time frame. Okay, buy side swept, break a structure to the downside. Okay, number 1, pulling back to 15. All right, what does that model show that the drawn liquidity is going to be? It's going to be here, right? This is recognizing the drawn liquidity, as well as 50% of whatever this range is, right? So on a bigger time frame, we already know that the drawn liquidity is going to be here. Okay, how do we perfect that entry? All right, we zoom in. All right, well, we can see the 1 minute retrace back to this this fair value gap here. Okay, now what are we looking for? Internal break of structure. All right, well, we don't really have any sort of significant low here. I would really mark in this. Okay, market structure shift. Notice, continuing to sell off. What am I looking for? Retrace back to discount. Okay. Boom. I draw on my thing. Retrace back to discount. Fair value gap. 5-minute fair value gap. Wow. Okay. I looked to short. That's the second model. Third model. Rejection off of fair value gap. What am I looking for? Displacement back to the downside. Boom. Displacement back down. What am I looking for? Pull back to fair value gap. Enter short. What does that say the draw on liquidity is going to be? Whatever that recent low is. What does this recognize the draw on liquidity is going to be? Whatever this recent low is. So all of these things start to overlap. When all of the people in the live sessions are, there's people that are very new and they come in and they say, Justin, are you going to take a trade today? I have no fucking idea if I'm going to take a trade today. I have no idea. If structure can present itself to me and I know and I have confidence with whatever the draw on liquidity is, then sure, yeah, I'm going to take a fucking trade. But I have no clue what opportunity is going to be presented to me today. And that's the fucking, whatever you want to say, if that's a good or a bad thing about trading, but that is trading. Trading 90% is waiting. And if you don't have the patience to wait and you don't know what you're looking for, that's the first issue. Now, one of my biggest problems when I first started trading was that I didn't know what I was looking for. I would wake up every single morning and, I would look at the market and be like, oh, I think it's going to go here. I think it's going to go here. I couldn't tell you why. I didn't have, any sort of model. I didn't have any sort of, actual reason that I would tell you. I would just say, it looks, we bounced up here. So I'm expecting us to maybe drop here. There's no repetitive system that I could constantly apply to give me confidence with my trade. And that's the whole reason and why I'm teaching this and showing you guys the importance of this, because with this strategy, you get to wake up and actually know what to look for, right? You're not lost. You have a system. And without a system in trading, you'll never get anywhere, because trading is about longevity. You have to be able to be prepared to, spend a decent amount of time in this game. A decent amount of time, putting in work, gaining experience, recognizing action, recognizing yourself, understanding emotion. And a lot of markets are going to change, right? Being able to adapt to those things. So without having a repeatable system, without knowing what you're looking for, it's going to be very, very, very hard for you. And a lot of the times you're just going to be spun in circles, because there's going to be times where, you have success. There's going to be times where you have failure, but you're not going to recognize why you're having success or why you're having failure. That's the whole reason why we do these charting sessions, is because we can look back and say, okay, was this a good trade? Was this a bad trade? Did I get lucky? Did I not get lucky? All of those things, because that is where you're actually going to realize what you're doing right and what you're doing wrong. Another reason why people don't find success in trading is just that. They think that making money is they're doing something good. That's the problem. And I want to shake that out of all of your minds, out of all of your heads right now. If you are making money, that does not mean that you are doing something right. If you're losing money, that does not mean you're doing something wrong. Okay? Think about that. That is the biggest problem. One of the biggest problems for new traders is they'll come into the market and, they'll absolutely go fucking off one week. They'll be like, dude, I felt like I couldn't fucking lose this week. I was, on a fucking hot streak. The trading is fucking easy. But you don't realize that, behind the scenes, you're taking terrible fucking trades, terrible risk management. You're simply just getting lucky. And all of those luck is just building terrible habits, because you think because that you're finding success, you're making money, that you're doing something right. So you continue to do those things over and over and over again, and you end up building such bad habits over time that stick with you. And by the time you can't realize that you're doing this until you just get slapped in the face, right? And that had to happen to me a lot of times for me to realize that is exactly what's going on. And that is exactly what's going on for a lot of you guys, is you don't know that you're doing something wrong until you get slapped in the face, right? So the whole point of doing these sessions is to really understand, is this something good? Is this something bad? Should I focus on repeating this, or should I not focus on repeating this? And both of these trades that we've reviewed now are absolutely repeatable trades. We have a repeatable system. We understand the draw on liquidity. We have good risk management. We have good entries. This is what you should focus on and always look to repeat, right? So that's something I want you guys to focus on. Always, that's why our biggest focus, right? Now, again, everybody comes into trading to make money. I get it. You guys want to make money. Everybody wants to make money. But your first year, your first 2 years, your first 3 years, you should not be expecting to make $1 million. You should not be expecting to quit your 9 to 5, whatever it is, because you should be focused on actually the process of trading. The biggest downfall for many people is they focus on making money their first year of trading. Your first year, your focus should be staying alive. That should be your first year. Is just gain as much experience as you can. Fail, embrace it. Don't be discouraged when you fail. It's a part of the game. Learn from your mistakes and focus on actually creating and building good habits. That is what Tactical Traders is about. Because I'm sick and tired of having communities in Discords just focus on giving alerts to people. Alerts are going to do nothing for you. If you are in this Discord to just take alerts, I'm sorry. But even if you make money in the short term, you are eventually going to blow up all of the money you have because you are not self-sufficient. You cannot make money in this game if you are not self-sufficient. And my whole goal with this community is to build self-sufficient traders by showing you guys the proper and improper ways of doing this. So focus on building good habits. That is our main goal in this community. Are we building good habits? Are we recognizing when we're not building good habits? Because if we do something wrong, I'm going to be the first fucking person to tell you if we did something wrong, right? In our charting sessions, that's the whole point, is we get to go back, look at the trade and say, hey guys, maybe it was a good thought process here. I liked the system, but maybe this was not the right entry. Or, maybe this was not the right plan. Maybe, we failed to recognize this. We failed to see this. Okay, this was good, but, maybe we could do this. When we get to actually sit down and think about why we're doing something, why we thought this, how did we act? Was this the proper way of acting? That is actual fucking growth. People don't want to put in the work to actually question their ideas, question their decision making, and actually look back on proper mistakes and proper trading in general. Now, a lot of people don't even journal. Journaling should be the smallest thing that you should be doing. Now, I say 95% of traders in the space do not even journal. So that's the first thing I'm going to say. If you don't journal right now, start journaling. Every single trade that you take a screenshot of it. I made a video on how to journal, so go watch it. It's easy. It's free. You can use OneNote. That's how I used to do it back in the day. Take a screenshot of your trade, your entry, your exit, and write down exactly why you took it. Say, okay, I came into the day with a bearish bias. I ended up seeing this trade. We retraced the discount, buy side swap, whatever it is, right? If it's a win or if it's a fail, always journal your trades, because this is what you're going to get out of it. And the more time that you start to journal your trades, the more that you're going to learn about yourself and the more that you're going to learn about trading in general. You're going to say, okay, look at my win rate on Mondays, man. I suck at trading on Mondays. Maybe I should just not trade on Mondays, or maybe I should lower my size on Mondays. This setup just seems to not work for me. Why isn't this working? Let me go back in my journal, see what's my top winning trades, what's my least winning trades, and start to calculate, okay, what's the reasoning for this? Okay, these trades were taken on this day, this time of day, and you'll start to see where you're most profitable, where you're most unprofitable. And that is where you're actually going to look to, find and nitpick those specific, things that impact your trading. Because every trader is different. Me, you, every single person in this chat is different when it comes to trading. We think differently. We have different ideologies. We have different priorities. And when it comes to trading, we're going to see different things. We all have different eyes, different brains. Now, the more time goes, my whole plan or my goal is to train your eye to be able to see these things real time. Right? Because that's the hardest thing, is it takes a lot of experience to see these things real time. It's easy to go back in the charts and say, oh, that would have been a nice trade, right? Because, you can see it played out. It's easy to go back. But actually seeing it live, it takes experience, right? Being able to train your eye to see those things is going to be, one of the key focuses that I want you guys to focus on. And that's why the live sessions are so important, but also the charting sessions are so important, because both are necessary, right? The live sessions are when we get to experience. We get to take live trades. We get to gain experience. I get to show you guys my thought process, in a live market. And the charting sessions is when we get to go back, review those trades, and talk about, why I did something, why, what was good, what was bad. And, really get to talk about the nitty gritty that nobody really talks about in trading journey. So reviewing those trades, I'm hoping everybody understood why we took them. If you didn't, ask as many questions as you would want. So now let's talk about what we're going to be looking at going into the rest of this week. So first thing I'm going to do is I want to take a look at ES, and I'm actually going to clear my entire chart here. So I want to do this both on NQ and ES, just going to get a fresh chart here, and I want to start on the monthly chart and work our way down, right? Top-down analysis. So first thing, looking at ES, we have this order block up here, right? Big time. Now, again, a lot of people on Twitter and in the space are going to hate me for this, but in my opinion, markets are looking like we want to go to all-time highs. And if we're looking at this monthly chart, again, recognizing displacement, we know displacement equals fair value gap. So we have this fair value gap on the monthly chart. Depending on how July ends up closing, I would like to see us in August possibly get a little bit of a bear market in the August time to retrace possibly back in here to maybe go back to look for all-time highs. Now, if we zoom back into the weekly, though, looking at ES and where we are right now, we have swept this high here, but notice we are breaking to the upside, so we are continuing to the upside. We don't really have anything here. We are kind of just broke through this inverse. Again, every sort of thing that would validate a bearish bias has been broken through so far on ES, and that's why I'm expecting to see higher prices. Now, a daily is where I like to zoom in and really get a better understanding of kind of where we are. Looking at this is where a lot of my bias is going to start to play out. Again, for me to be bearish on a bigger time frame, I would have to see some sort of significant low on a daily time frame get broken through. And right now, that hasn't happened, right? Now, we can say this is a significant low, this is a significant low. There's not really anything up here. So what could I be expecting? Maybe come down here, put in a low, come back up, and then look to sweep that low, and then look to come back in a lower, right? Once we actually break a low, right, with big displacement, that's when I would be looking to see, more downside. But until that happens, I could expect to see more upside. So right now, looking at the daily, I can look at this leg and possibly expect us to go back to discount. So we actually do have this daily fair value gap right here. Oh, put it wrong little thing. Let me take that off. We have this daily fair value gap that I would like to see us retrace. If I was to draw in our fib here as well, you can say, see actually 50% discount lines up perfectly with the top of that, as well as OTE lines in really nicely there. So zooming down to a 4-hour, you can see we are starting to displace back down. We have come back up and rejected that 4-hour bearish fair value gap. We have a small little fair value gap here, but we are seeing more downside. So going into tomorrow, I do expect the draw on liquidity to be this 4-hour sell side level here. So going into tomorrow, again, depending on what happens in the overnight session, I will be expecting to see this low being taken. Now, what do I think the draw on liquidity is? Well, 4-hour, we do have this low right here as well as these past imbalances. So this is where I'm actually expecting to see price come back to, is this 4-hour fair value gap to possibly come back and sweep this low. Now, we do have relative equal lows stacked here from previously in the last couple weeks. So this is going to be my next bigger time frame sell side level that I want to see come back into. Zooming in on the 1-hour, you can see we put that high in here. This would be our break of structure, right? Big displacement. We've now retraced back to discount, respecting all of this accumulation in that order block. Displacement back to the downside. Could expect to possibly see this hold here and then look to see a sell-off in the overnight session. So that's honestly kind of what I'm expecting to see. Is I'm kind of expecting to see this get taken in the overnight session. So going into tomorrow, I am going to be short biased on a bigger time frame. So I'm short biased going into the week so far. But going into tomorrow specifically, I'm going to be a little bit more cautious because I am expecting to possibly wake up after we've taken this low. So if I wake up, somewhere here, I would look to be a little bit more cautious taking shorts just because we've already swept that initial low. Again, I want to see more structure start to form at that time. Possibly look to target this low right here as well. So a lot of it's going to depend on what happens in the overnight session, but I am bearish going into the week so far, and then I'll look to see the reaction once we come back down to these fair value gaps here. We have a really nice 1-hour fair value gap overlapped here. And what I honestly would like to see is come down, sweep that low, and then look to see us hold that previous 1-hour fair value gap, and then look to see us go back to that high. So looking at NQ now. Again, let's clear the charts a little bit here. First thing I'm looking at is those daily equal highs that we just swept on NQ. So we have these relative equal highs here that ended up getting swept on NQ. We can see already starting to get displacement back to the downside. Now, what am I expecting here? This is already automatically giving me a bearish bias going into the rest of the week, right? Especially since we've starting to displace through this bullish fair value gap, right? Especially after we've swept buy side, what do we expect to see? We expect to see bullish fair value gaps getting disrespected. So far, we're still holding this, but the way that this daily candle's forming, I would expect to see a little bit more downside. Now, we actually are forming this daily fair value gap here, which I could expect to possibly come back into this and then maybe see lower. Zooming into the 4-hour, though, we have retraced into this 4-hour fair value gap and actually rejected, looking to see lower. So that's, you can see that internal level was taken here. So going into tomorrow on NQ, again, zooming in, my resting buy side level is going to be that previous high that we've swept. Possibly look to come up and maybe sweep that high to then go lower. 4-hour as well. We do have some imbalances down here. The biggest thing I would kind of be watching for is going to be that daily fair value gap, though. Now, notice I think we have actually retraced a discount already of this range. Yeah, so we just now reached discount of this range. I am still bearish going into the week, though, because we've swept those equal highs. So now that we've initially swept those equal highs, I could expect to see a lot more downside coming later this month. The biggest sell side I'm actually watching is this level right here, which I want to see us come back to. We have 3 stacked equal lows here on the daily time frame that I'm looking to see that come back into. I actually think, yeah, we have a weekly fair value gap here. So this, in my opinion, I want to see become the drawn liquidity. Now, for me to have confidence saying that this is the drawn liquidity, again, I have to see internal structure on a daily time frame, meaning us put in some sort of low and then break that low with big displacement. That is going to give me confirmation that we can come back down and take these lows here. Right now, we're just getting that initial rejection, right? So far, we've swept the level. We're starting to get initial displacement to the downside. Now I want to see a little bit more structure starting to form on a bigger time frame. Now, intraday, right, I do expect us to have a little bit more downside. So what would I look for to have a proper, setup to the downside? Look to see some sort of high or low being swept, right? And in this case, I'd want to see some sort of high, right? Because if I'm in a bearish market, I'd look to see us come up, sweep some sort of 15-minute high or 30-minute high, whatever it is, and then look to trade that model back to the downside. Right? So, any questions? Oh yeah, let's take a look at news. There is a lot of news this week. So on Monday, we do have PMI at 9:45. So 15 minutes after the opening bell, I'll be looking to wait for news to come out. I won't be taking any trades the first 15 minutes. I'll wait for PMI. On Tuesday, we do have consumer confidence at 10 a.m., right? More 10 a.m. news. Wednesday, we do have FOMC. Now, I'm still deciding if I'm going to trade Wednesday or not. I'm actually not sure if I will. I actually might not trade the morning, and we'll do FOMC live. So me and Johnny are actually planning to do an FOMC session, like right when FOMC comes out. So we'll probably be doing a PM session on FOMC, and we'll skip the AM for FOMC on Wednesday. And then Thursday, we have unemployment claims 8:30 a.m. and Friday we have consumer sentiment at 10 a.m. So we have a lot of news this week, pretty much every single day. Can you tell me why this didn't go, or this one? Why is it so blurry? Looking at this one already, I can tell you bigger time frame that there's no break. Now, this is internal break of structure, and you can see that buy side level already got met. But on a bigger time frame, again, all of these is overlapping models. So again, it's kind of hard to see because it's very blurry, but from what I can see, I can't zoom in here, which fucking sucks, but how do I zoom in? I don't think I can. There we go. So again, if this was our break of structure and we pull back to fair value gap here, what does the draw on liquidity become? This high. That's guaranteed. Once that gets taken, the model's over. You leave your runners to whatever those highs is. There's no other trade after that. With this, there's not even a break of structure here. There's no high gets broken, right? There's no high here. Actually, here, let me show you. Right? If we're looking at this, right? Because you're looking at the 15-minute here. Our draw on liquidity is still this low, right? There's nothing here. For me to take a long here, there's no break of structure on a 15-minute time frame. On a 5-minute, there's really still nothing. 5-minute, there is no break of structure, right? We put a high in here, we break through, there's no displacement through this level. Now, a 1-minute, okay, you could actually get a trade here, right? The 1-minute ends up working out, but the 1-minute goes to whatever the previous draw is. The 1-minute high is not this. That's a bigger time frame. The only trade that you're going to get here trading 1 minute, you're not going to get a massive move, right? You have sell side swept, you have break of structure, big displacement, you have pullback to discounted fair value gap. Okay, what's the draw on liquidity? Your easy pickings is going to be whatever that high is. Okay, that's where you take off half. You put your stop to break even. You target the rest of the highs. you know, you maybe target, you know, we come back down, maybe come back up, you know, take off a couple extra, and then you get stopped at break even. The model's done. That trade's over, right? But bigger time frame, you shouldn't be expecting to come back to this high unless this gets broken, because bigger time frame, the draw's still here. So for you to buy here when there's no break of structure on a 15-minute, right? We just put a high in here. I would be looking to see a break here, but this ends up just getting swept to go to whatever that draw is. So there's no long targeting this high. The only long you have is that internal trade here targeting whatever that initial high is, and then you leave your runners. And if you get lucky getting the high. Is an inverse for volume gap going against the bias, or is it acting as a magnet? It depends the context. It just depends on the context of it. Going against the bias, again, I couldn't tell you. It depends on the context. And acting as a magnet, I wouldn't say acting as a magnet, more as just acting as confirmation, right? What's being respected, what's being disrespected. Oh yeah, let's go over new week opening gaps for this week. So we'll go to, where are we right now? Sunday, Friday. We go to Friday closing price to Sunday opening. Friday closing price to opening Sunday right here. So this is going to be our weekly opening gap for this week on NQ. If you guys want to put this on your charts, it's going to be 15556. So 556 and 555 is going to be our weekly opening gap for this week on NQ. I'll make this a separate color. This is a loss I took on Friday on ES. Was this a valid entry? Let me see if I can shit on my chart, because I want to see what the other price action looked like at this time. Sell side swap. Okay, I'm guessing you took it here. Okay, so great question. Let's talk about why this didn't work. Why does this not work? Zoom out, right? Always zoom out first. Looking at this 15-minute. What form of sell side did we just run? Looking at the 15-minute, is there any sort of significant low or significant high here? What does this become? What do all of these lows become here? Someone tell me. Yep. All of this becomes low resistance liquidity run, which means if we take one of these lows, even if we get initial bounce, we're always going to expect to get all of these ran, right? So the only actual pure sell side level that you have here is this. This is the overall sell side. Now, the only way that I would expect this to work, okay, so you have, again, I would watch this initial low, but this initial low is my break of structure, right? Again, we're in a overall bearish trend right now. We've had a break of structure right here, displacement back down, retracing back to discount of that range, right? Because this would now be our break of structure on a bigger time frame. We've retraced, respecting previous order blocks, big displacement back down, and now breaking through that previous low, now pulling back to discount. So again, expecting to see that high, you're failing to see the overall draw in liquidity, right? Because we just came up rejecting that big displacement back down, displacing through that low. There is no sell. Now, this is all sell side. Yeah, sure. There's a bunch of liquidity resting here. But just because one of this lows or this low or this low or this low, when you don't have a clear low, there is no there is no positive sell side. Meaning, okay, I can mark sell side here. Okay, I can also mark sell side here. Okay, maybe even here, right? When you do that, that means that you should not be trading or trusting whatever that sell side bounce is, right? Because again, low resistance liquidity run. Even if we get initial bounce, what are we always expecting to see? Big move back to the downside to wipe out all of these lows, right? That's telling me the draw is also this low here. So that's why this trade did not work out. That form of sell side being swept was not valid. Do you need overlapping models all the time, like a 5-minute break paired with a 15-minute break or a 1-minute break? No, you don't. But if you can't, all of those are going to be the highest quality setups. So if you want to take A+ setups and you don't want to lose, then wait for overlapping models, because those are always going to be the most confident setups. And that's when you're going to get the best entries possible. Like if you look at the NQ trade and the gold trade, like looking at NQ, you would be like, how the fuck would you know that you were going to get, that move, right? Because we have this low the entire day. And every single person that traded today got stopped because they're trying to trade all this action. There is nothing in the charts right here that is telling me that we're going to go to here. Now, we could have, but there's no trade for me to take, right? That's where the priority starts to shift, is I do not care if the market comes down to take this level or not without me getting in a trade, because the market never told me it wants to do so, right? So how is there any opportunity for me to take a trade if the market never even showed me there was an opportunity to begin with? A lot of you guys are in such a terrible mindset because you think, oh, this got hit already. Oh, there's no trade for me to take. Oh, fuck, I'm not going to make, I can't fucking buy food today. Like dumb shit like that. When you're focused on the wrong things, you're going to build terrible fucking habits. Now, all of the people that tried to short, here, expecting the market to just go to sell side and not recognizing that we're just chopping because they don't know how price works, all of them got chopped and all of them end up red, right? Now, a lot of people are like, oh my God, how did you get the perfect fucking entry and then just a straight down move? It's because I can recognize price and recognize what I'm looking for and recognize structure, right? Not only am I overlapping models, right? Wait, we have relative equal lows. Okay, what am I looking for? Pull back to discount first. All right, bigger time frame PD arrays now being respected. Wow, I zoom in. Wow, what else am I happening? Internal buy side just getting swept. Okay, another internal model. We've swept we swept buy side now. Okay, what else am I waiting for now to be even more clear? Wow, break of structure to the downside. Oh my God, wow, what else am I waiting for now? Pull back to some sort of fair value gap. Okay, wow, what else am I waiting for now? If now that's an entry on alone, right? That's an entry in itself, right? Fucking take that entry all you want. But me, I'm going to be a little nitpicking motherfucker because I want to get funded. And I'm going to wait for this sell side to get swept now. And that's where I add half my position, right? Even better risk management. I add half my position, wait for another internal break to the downside, showing that the draw on liquidity is now this low. And then I add my full position and then I let the market do its thing, right? But people don't want to be patient. People don't want to wait for that. They're too impatient. You guys want to make money now. And I get it. But you got to fucking be able to have patience and understand what you're looking for. And don't take a trade unless it presents itself. It's simple as that. If you want to win, which I know all of you do, stop taking stupid fucking trades, expecting to win just because you're focused on winning. You want to win. I get it. You have a little fucking, you have the itch to put on a trade. You want the satisfaction of just having a winning trade. I get it. But you got to fucking wait. A lot of you guys are so impatient and undisciplined. You can't sit in front of a chart and not take a trade. With news coming out, how long before news would you look to comfortable trigger trade? Like, would you take a trade 10 a.m. knowing news 10:30? Good question. A lot of the times I'll take it. It depends. There's no specific time where I'll be like 30 minutes after or 50 minutes after. It's whenever the draw is clear to me. And whenever action starts to clear up, right? Because a lot of the time news, right, we're going to get, spontaneous action. It'll be fast, and then it'll start to slow down maybe after that. Until I can recognize that action is good for me to trade and there's a clear draw on liquidity, then that's it. Again, it all has to do with opportunity. If there's nothing there to tell me or give me confidence where the market's going to go, there's no reason for me to take a trade. So it's all going to depend on what's actually in front of me. And a lot of it just takes experience. That's why our live sessions are good, because I can tell you guys, hey guys, this looks good. Even news just came out, or maybe guys, this isn't conditions we should be trading right now. All of it just is just thousands of hours put into the market. I got you, Evan. Yep, not trading is the hardest thing for real. I always think sitting for hours and not trading, I just lose my time, but working on it. It's good, brother. I get it. Can you give another example of overlapping models? Yeah. So let me just draw it out for you, basically, right? So what do I mean, right? So let's say this is a 4-hour time frame, right? Let me just draw out some action here. Let's do boom, 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 right? All right. Say we got some action here. Let's say this is a 4-hour time frame, right? Four hours, right? We got a lot of room to work with right now, right? So this is our sell side. We can see sell side just got swept, right? Let's say on a bigger time frame as well, there is, maybe a daily fair value gap here, right? Or let's say, 4-hour maybe, all right? So now we're zooming in, right? All right, so I'm going into the day, 4-hour time frame, and what am I automatically expecting to, probably see here? Well, looking at this, let's say there's not actually equal. If there was equal lows here, I'd be a little bit cautious because I'd want to see those equal lows get taken. But let's say it was, it was like this. So we had a little bit of turtle soup. Let's say, right, we got break of structure. We got a decent amount of displacement. We're starting to come down into a 4-hour time frame. Okay, so top-down analysis, going into the day, I would be a little bit more. I'm very bullish, right? Now, the only way for me to say I'm not bullish, or the way I'm going to be bearish, is for this fair value gap to get ran through. If this fair value gap gets ran through, then I would expect sell side to be this low, and then this low here, right? If this fair value gap gets ran through to the downside. So going into the day, this is where I zoom in. All right. So now I'm zooming into a 1 hour, right? I'm on a 1-hour time frame now, right? So now we have a little bit more structure, right? This is where we start to see a little bit more things. So now this is what action looks like on a 1 hour. All right. Looking at the 1 hour now, I'm like, okay, wow, we're starting to get some more action here. So I'm actually zoomed in. So now what am I looking for? The exact same thing. Wow, we just came down. We put in a high, and we have big move back down, but we just swept internal sell side, right? Internal sell side just got swept inside of this fair value gap now. Okay. So now we had a big move to the upside. We just ran through all these bearish fair value gaps. We have a break of structure to the upside again. Wow. So now I'm really bullish. Now, again, this is now time and price. The odds of us going straight to this high are a lot probable now, a lot higher probability than just coming down here, right? Because I don't know if we just come down to this 4-hour fair value gap, I don't know if we're just going to bounce right now to this high. I don't know if we're going to break through this high, right? So I wait for structure. I wait to see another internal model. Come down, come down, come down. Wow, we sweep internal. Maybe there was even a trade right here, right? Maybe there could have been a trade right here. You never know. Actually, can I turn... Actually, I don't even think I can because I'm so zoomed in. But maybe there was a trade right here, right? Break of structure, pull back to fair value gap, targeting that high. That could have been another internal model you could trade. Okay, so now we're going into this day, right? And we're pulling back, back maybe an inverse, maybe another fair value gap, right? And I have a clear draw on liquidity. So not only am I going into this day with a bullish bias, expecting the draw on liquidity on a 4-hour time frame to be this high, right? But now I have a clear draw on liquidity expecting this to be that high. Again, not only is the 4-hour telling me the draw's here, not only am I zoomed into a 1-hour telling me the draw's here, and not only am I zoomed in again, maybe on a 15-minute, expecting to see some form of sell side here, and then once that gets bounced up, okay, what can I look to take an entry? Maybe I can look to take it here, maybe lower size, have a little bit stop, but if I want to have an even better entry, I look for the exact same thing. Wait for a bounce to the upside, wait for a fair value gap, and then look to take that high. And then this would be my long entry. Does that make sense, guys? This is what overlapping models is. This is how you're going to get perfect entries, like that NQ trade, right? Avoiding all this chop, right? Not taking a trade the entire day because I know what I'm looking for, right? I know that for me to take any sort of trade prior to this, there's no good setup here. So I wait for markets to tell me what's going to happen. And when you can gain experience with that and you know what you're looking for, that is when you're going to get time mixed with price, mixed with good execution. You're going to get good trades like this. So looking at this trade right here, once all of that internal action forms, that is when you can get a quick acting move to whatever that level is, right? This is what when I say overlapping models, it means this. It's using higher time frame draw on liquidity to then zoom in to understand when that draw on liquidity is going to get taken. And then zooming in again to look for when that intraday draw on liquidity is going to get taken to whatever the overall external draw on liquidity is going to be. Exactly. The more confident, the more overlapping models you have, the more confidence you have and the more conviction. Where would your stop loss be? I mean, it depends. Again, all of the trades would be different, right? If I was to take this initial long, it would be, whatever that low of the fair value gap is, and then my first price target would be that, and then I would, let my runner go to that buy side level, right? Now, if I'm taking this trade, be the exact same thing. First price target would be this high. Stop would be at the bottom of the fair value gap. Let my runner go to that high. If it was this fair value gap, long here, probably stop at the low. First price target would be that high, and then I'll let my runner go to that high. Right? Understand? How late in the day is too late for you to take a trade? 20 minutes before close. Normally, I don't take a trade. Or probably 30 minutes, honestly. But it all depends on the day, because there's some days where we get a lot of power hour moves. A lot of times we get clean action in the pen power hour, and there's other times where there's no volume. So it all depends on the day. But most of the time, if you're trading like 10 minutes before close, then you should not be trading. Like, that's like definitely no. All right, guys. I think that's all I have for you guys tonight. Did we enjoy tonight's session? Did we learn everything? Are we doing well? Great stuff. Much love. Much love, guys. You explained everything so good. Much love. Thank you, Evan. Quick question. A breaker block is essentially an inverse for value gap, but for order blocks, right? I mean, I understand why you say that, just because it cuts through price action, but it's completely different. But I get what you're saying. It just because it cuts through price action, yes, but yeah, I guess. This is my first time here with you. How do you go live? Is it in the morning when the market presents a trade? No, so we go live every morning, 5 minutes before market open, and we'll hop on Zoom. And normally I trade the first 2 hours of the market. I get learning all of these new many PD arrays. Did you feel confused or overcomplicated at first? Oh, of course. Oh, wait. Did you feel confused or overcomplicated yourself? Like when I first started? Absolutely. Again, anything is complicated when you first start, right? Again, just the more familiar you get with it, the easier it becomes, the more you can recognize it. That's why experience is so important. Just the more that you start to, spend time with us, the more that you come to sessions, the more you come to live sessions, the more that you watch our content, the more that you're going to be able to recognize it. Yeah, exactly. Just chat. I'll talk about, the action, what I'm looking for the trade until we take a trade. And, maybe sometimes we might not even take a trade, right? There's days where opportunity doesn't present itself, and we have to have the discipline to, sit in front of the charts and not take a trade. If we have a change of character and an okay displacement, but no fair value gap, and it's in the direction of your bias, that's 3 things. Would you put risk on the table? Yeah, I can look to take a trade on an order block, volume imbalance, breaker block, whatever it is. Doesn't just have to be a fair value gap, but most of the time I would want to see a fair value gap. Do you always need a sweep, or SMT can be fine? SMT would be, I would want to see an SMT as well as a sweep, but a sweep, I don't need to see a sweep. I can see a rejection off a bigger time frame PD array. Like for that NQ trade, right? There was no sweep for this trade on a bigger time. I mean, I guess there was. We had this internal sweep, but here we didn't, right? There was no sweep here. We just rejected this fair value gap, and then we rejected this fair value gap. But we did have an internal sweep. But yeah, and then we also had another internal sweep here, but yeah, you can trade options for this as well. I mean, you're trading SPY and QQQ. Most people here trade futures and Forex. Do you feel like ICC has more to teach in terms of technicals till November, or we kind of have enough to navigate the markets when he's gone? Dude, there is plenty of fucking information for anybody to be able to have consistent profitability with what he's been given, or what he's given. Yeah, I don't think you really don't need anything more. A breaker block is a break a structure with an order block that gets pulled through price action. Again, I can't. That's pretty much the basic explanation, and you'd have to watch a video on it. But all right, guys, that's all I have for you guys tonight. I will see you all tomorrow morning. Get some rest. And I'll see you tomorrow for live training. Hopefully you guys enjoyed tonight. I'll post the recording if you guys want to go back and look at what we talked about. But yeah, enjoy the rest of your night. I'll see you all tomorrow. Peace.